Adam Chaudhary. Thank you for joining me today, good sir.
How's it going, Dalton? Thank you so much for having me on the show.
Absolutely. Well, I meant to ask you this beforehand. Where are you based out of? Where are you located?
I am in Newport Beach, California, so Southern California.
Loving it, loving it. We had a dry spell. We're in Greenville, South Carolina,
Yep.
Lima One Capital headquarters.
Yep.
Tripping over my words today. And we've had like 3 weeks, 4 weeks, maybe even of virtually no rain.
Yep.
It's been over 100 degrees most days, just insufferable. And now we have like a week of scattered thunderstorms and rain coming in. So I hem and haw about the weather to you because you don't know anything other than spectacular weather out there.
We get rain out here. People get into car accidents. They don't know how to drive in it. So.
Insanity. I want to hear no more. I want to hear no more.
Exactly.
But you have a pretty interesting firm that you run. You're president of FundingShield. Yep. We have a relationship with you at Lima One Capital. And for the audience, a very interesting firm. So at a high level, tell me what you do.
Yeah, absolutely. So we focus on kind of risk and fraud in the broader real estate and mortgage sector. But the specific area of risk and fraud that we're focused on is surrounding wire and title fraud. So payments risk in terms of those payments that go out in very sizable numbers, as well as the fact that there's a process in terms of how you engage with title, what coverage and recourse you expect to have with title partners, settlement partners, both from the issuance of title side, the title insurance side, as well as the disbursement and kind of the settlement side. So we're helping lenders make sure they're working with valid parties. We're streamlining processes, kind of verifying data earlier on in the life cycle, pre-close into closing, and also providing kind of diligence and verification services, kind of being your eyes and ears, and also figured out some pretty cool ways to do some kind of financial structuring, given our backgrounds of the principals here, to provide some warranties and additional recourse that firms like Lima One and investors and warehouse partners and funders love.
Yeah, it is. That's just like the worst fear of a lender. Really, is like a bad actor who can cause kind of a total loss on something, right? Because we deal risk, like our chief job as a lender, I see, is risk mitigation. It's like, yes, we want to lend money out, but that's secondary to mitigating risk. How do we make sure we know that whenever we put $1 out the door, that's going to come back home to us? And if you're a good actor in the lending space, you don't want to take back properties. We're not a property management company. We don't want to manage projects all over the country. Like, we genuinely want every single deal. If we could have a 0% default rate, we would be spectacularly happy. Just by virtue of doing hundreds of millions of dollars a month in volume, you don't have a 0% default rate. But whenever you do have something default, you have some kind of collateral to take back and do something with. But in the case of wire fraud, you mentioned, a bad actor attorneys, like all different kinds of, as I mentioned, I think I used this earlier, like barbarians at the gate. So talk to me about like what are some of these barbarians at the gate that you're seeing right now in the space?
Yeah, so I think broadly, kind of thinking about this business was designed with Ike Surrey, our CEO, and myself. We have different backgrounds, and the way we built the product kind of explains the risk that we're managing. And I can get right into kind of what that risk is that we're seeing today versus when we launched the company years ago. But Ike's background as a technologist, he's launched companies from his, the great immigrant story coming from India. First client as technologist was, Goldman Sachs and Cantor Fitzgerald, launching trading floor systems in New York and London, and just an incredibly intelligent guy. Always thinking about data security, transmission of data for a specific client use case. And so that brought him all the way up through the networking topology, from router switches to fiber optics, et cetera, but always thinking about how to secure the data. So industries like airline ticketing to BART surveillance, like in the Bay Area, airline surveillance, satellite communication for the broadcast networks, right? He worked on those projects and brings that acumen of how to take highly regulated, highly sensitive private data that cannot be altered, touched, manipulated because it's highly sensitive, and making sure it works for the workflow. All right. And that's kind of what we're doing in the mortgage space as it pertains to sanitizing data, cleansing data. And I kind of come from it from a different perspective. I came from the Wall Street structured finance side. So I worked at companies like Greenpoint Credit, Goldman Sachs, Greenwich Capital, RBS, and then left that to join Ike about 9 years ago now, to launch private investments, and then raised my hand, and with his guidance as an owner operator, went from being a banker, financier, to really wanting to become an operator, which was a pretty big shift. But luckily to say, we're here today and excited to be a successful company. But part of that journey was coming to companies like yourself, and going to lenders and saying, what are your pain points when you're dealing with settlement agents and closing agents? And in the residential world, it's a little bit different than what it is in your world. So you go to like a Guaranteed Rate or a Quicken or a Bank of America, they may be interfacing with tens of thousands of unique relationships of settlement agents in a year. They're also regulated a lot differently than you are. So some of the motivations on the residential side of the business are more around, I need to diligence these third-party service providers because the CFPB tells me I have to, and the OCC and the Fed, depending on how you're regulated, tells me I have to. Beyond that, from a risk perspective, that's where the overlap is between resi regulated and kind of the world and private lending markets you guys operate in, which is, I guess, the broader term is how we bucket kind of the small ball, the bridge, the fixed flip, and kind of the value add lending proposition that firms like yourself are kind of bringing to the table. So that intersection is around, how do I make sure that when I send money out, it's going to the right party, that there's actually be title insured backing, to make sure that I get, kind of coverage from a title insurer. And beyond that, in a world where there's about 80,000 parties that can provide these services across the country between attorneys, settlement agents, title agents, escrow companies, how to make sure that they're actually approved, verified, validated, in good standing. And the added kind of challenge that maybe a wholesale business in the residential sector and your business as a whole has is that many times your borrowers are sophisticated real estate participants. They have relationships with these folks. They might be sourcing properties from these folks. The seller might be driving the settlement and title parties, right? You really don't have as much control of that kind of independent third-party settlement party that's supposed to sit there and say, party A, party B, okay, we're going to do this closing. Yeah, they're still going to have their opportunity, their responsibilities to act in a prudent and in a manner depending on the type of closing. They have to act as a fiduciary or whatever the case may be. But long story short, you're taking risk that the execution of your closing instructions are carried out and fulfilled by that closing agent. Now, the risks are like any other organization. Are they equipped to handle the file order and load that they had? That was a big issue when the refi boom hit. A lot of the lenders in your space are saying, I cannot get my loans closed because everyone is so busy dealing with, the 55 refi apps that came in last night that the title file order is just getting delayed, to all the way through to, do they have the right sort of staff working on this stuff? 3, challenges that all organizations are dealing with. Can I hire the right people, right? And can I afford to hire those right people? So there's all sorts of issues that are basically more operating risks. And then we're going to talk a little bit about kind of the cybersecurity risk, which is a new big one, which is a business email compromise, the hacking, the phishing, the impersonations, the bank accounts of these settlement agents that are getting hacked into. We had a situation last week with an attorney. We were the party that told him and identified that his email server and communication wasn't from him. He had no control of it. He had a bunch of emails going everywhere as a law firm partner and the escrow officer confirming and verifying a bank account with their phone number. Their phone systems got taken over. Long story short, anyone who's just doing the pickup phone call, check the phone wiring instructions and whatnot, got defrauded. Our clients didn't lose a penny, but we know that that's going to be a new fraud that's going to get reported in the market. We're working with the FBI and other regulatory agencies right now, as well as criminal agencies to pursue this. But I'm jumping around a lot, but the reason I'm kind of trying to paint the picture is, at the end of the day, there's a process that Lima One has to follow, just like every other lender. They have to make sure that they're working with bona fide, good standing parties, they're sending money to the right place, that the documentation you're actually using to close a loan file is accurate. And that's so important in a business where the loan balances are very large, as well as the parties, including the broker, the borrower, the seller. They're all sophisticated real estate parties. It's not like the residential business. So it's even a higher risk profile in many cases in the residential business.
Yeah, to me, I like how you bifurcate it, the operator side of the fence versus cybersecurity. I think that's a really good way to bifurcate it. And both of them have that total loss potential.
Yep.
The operator one has always been a little, in a way, I guess I get a little more of a stomach churn when I hear that, although the cyber one is broader and bigger. I guess there's a more personal flair to the operator one. Like you've been communicating
Yeah.
back and forth with these people,
Yep.
and then you find out at some point that you have the oh no moment of like something's not right here.
Yeah.
And I've been party to some of those transactions, and it is just the absolute worst. And that every lender of any size is insured,
Yeah.
right, for things like this, but that like getting a claim approved for something like that takes a very long time if it ever happens. And sometimes, like you said, the sums of money are large. The average loan amount in this space for most lenders, a few $100,000. Just nationwide broadly, you go to California or other markets and it's going to be higher, but you're talking into the six figures for the average transaction size. So it's horribly scary. So which road do we want to go down right now? Do you want to talk about the cyber side of the fence a little bit?
I think let's talk about the operating side, because I think a lot of times the biggest challenges for kind of the things that we expect to see, maybe go there, and then we can go the cyber route, because I think that talks about the broader digitization of the overall real estate market, right? But on the kind of on the piece of kind of the non-cyber related risks, it's really about execution of order. It's about following through and making sure things are registered and filed properly. And beyond that, it's also making sure that the transaction data lines up. And I know this sounds crazy, but when I was on Wall Street and I was buying whole loans and we were having to figure out how to price these loans, I would ask some basic questions, right? And everyone said, oh, don't worry, there's a TPR, third-party review on these loans. It's great, da-da-da-da. And I would say, how are these loans, how is the title on these loans? Who did the title policies? They're like, why do you care? First American's on it. I said, I love First American. They're a great company. But all these individual agents procure these title policies, and some of them were still yet to kind of record. So I'm taking a tremendous amount of risk on the recording risk, on the execution risk of that closing instruction by that closing agent. And so I think that's where I think this space has gotten it right. The residential side kind of says, oh, I have some documentation in a file. I'm fine. I have a closing protection letter. It's in the file. I'm covered. We asked, has anyone looked at it? No. Does anyone check to see if the typical Alta forms of coverage, which Alta does a great job of making sure that there's some best practices around what should be in place in terms of coverage. But there is no policing that Alta is doing of its agents in terms of, are they the right agent? Are they even approved to issue that policy? Is somebody crossing state lines or jurisdictions or issuing you paper that's really not backed by a title insurer? And then whose risk is that? And at the end of the day, living the world we live in post 2008, it's the lender's risk. There's not a court in the world that's going to say you as a sophisticated lender who has knowledge as to what is required to conduct a close should understand the requirements of title, because it's so important as it's part of your underwriting. And unfortunately, that's where the gap exists. A lot of times lenders are very good at lending. They may have a few underwriters that understand title because they've been around the block enough, but you can't always put this onus on your underwriters, especially for a group like Lima One or others that are growing, scaling, and trying to basically find the most optimal process to get the right skills in terms of skill sets from your FTEs, the combination of technology that comes on top of that to augment that, to fulfill and fill those skills gaps so that you can really get that loan through the process as fast as possible. Because why are we doing this? Apt to close. We want to keep that window as short as possible and give as much certainty to our clients that A, we're going to give them a good product, B, we're going to protect them from themselves in many cases, and 3, we're going to protect us as well as our investors and our partners to make sure that we have the right reputation as an industry so that these events don't cause issues or ripple effects in terms of our reputation.
Yeah, it's always good to hear like a partner space focus on kind of an aligned interest, which is speed, certainty of execution, and just quality deals. Right? Like you and I were chatting, I think a little bit before this, and we that's at the forefront. If we could have no foreclosures, nothing like that, solid. Let's just lend on good projects, and like you said, save the client. Right? In a lot of cases, that's a tough thing to accept, right? But at the end of the day, it's like we only do deals that we believe are going to pay off. It just circular back to, we're not looking to aggregate a bunch of real estate here. But on the so would you say that has there been in the last few years a material swing away from the operating bad actor side over to the cyber side, or is it kind of a continuing the same balance?
I think that the biggest trend that we see in the title space is there's a lot of consolidation taking place within the organizations, right? So a lot of these larger national title platforms are coming in. There's also a move for some of the more tech-driven underwriters and kind of tech-based players. And there's also some great new providers out there like Spruce and others that I'm sure you guys use or see in your closings that have really done a good job of kind of balancing technology, building really good processes to help execute files better. But I think the last couple of years, it's still a pretty good mix of when the big frauds happen, it's a lot of times there's collusion amongst a fraud scheme. There's elements of cyber-based fraud in that. But a lot of times it's really insurance fraud. I think a lot of us forget title is nothing without the insurance that backs it, right? It's kind of what greases the wheels and makes us feel comfortable because a typical title agent or law firm isn't going to have millions of dollars of capital lying around. They're mostly LLCs. They're distributing, like any other LLC, is to partners at the end of the year. So from an effective capital perspective, all they really have to fall back on is really the insurance policies and then whatever other personal assets that an operator may have. They want to save their reputation and name. Now, in a fraud event, they're clearly not looking to save their reputation and name. They're looking to defraud somebody, or they've borrowed against client funds. That's another one. What we see a lot is the IOLTA accounts, and like the big ones that you guys read about or hear about every couple of 5 or 6 years. It's basically the IOLTA account or escrow account is being used as a Ponzi scheme, right? They're borrowing against it. It could have started out as, hey, I'm covering payroll. Then I'm covering my car payment. Then I'm covering my XYZ, extra girlfriend's car payment or whatever the hell it is. And then it gets out of hand. And then what they start doing is they start delaying closing, issuing more title file orders, sitting on more funds to cover that short balance in the hopes that they can earn back with their income to pay up and to cover that short balance. And unfortunately, like most Ponzi schemes, by the time you figure out that, hey, this is a problem, you can't really fix it. And so that's where a lot of those risks reside, is that they're borrowing against their client funds, which they should never be doing. But I do want to reiterate something. The vast majority, I have to say 99% of the title companies that we deal with, at the end of the day, once we come in and kind of find out that there might be some data inconsistencies, licensing problems, data inaccuracy, they want to do the right thing, and they want to get it corrected. That being said, there's still that 1% net out there that is kind of trying to bend the rules, do what they need to do, move funds where they need to get things through the door, either because it's a client facilitation thing or it's an income issue or it's a squeeze on staffing. And there's things that we do to help them avoid that, as well as help work with the title insurers to say, like, look, this closing agent in Texas is doing a ton of business, is originating a ton of business in Oklahoma. First American, you might want to consider granting them a license if they qualify in the state of Oklahoma. They meet all the other qualifications that we see, right? So why don't you do it, right? And so that's the sort of kind of dialogue we're having, because about 30% of the transactions we touch, and we published this data with Housing Wire, Reuters, Bloomberg, was about 36% the last quarter, have at least one element of data inaccuracy, the wrong bank account, a bank account for an unaffiliated party to the closing being used, all the way through to transactions. 5% of transactions were not in the system of a title insurer at the time of close. That is not acceptable. That should never be happening. That means a title commitment you receive, the CPL, the wire, any of those other title documents are not authorized, registered, and in the system of a title insurer at the time of close. That is, in some states, insurance fraud. It's a criminal offense. In other states, it's like, okay, this isn't good, but we're not going to, kind of dig any charges against anyone. What we do here at FundingShield is we say, guys, this has to be in the system of the title insurer. We have to be able to independently verify and validate that transaction exists in terms of the actual title file order. So we're taking kind of meat and potatoes, kind of credit style review processes, putting our automation on them, as well as using our AI to help kind of figure out where are the gaps compared to our existing data, which is based on about 50 to 90 billion of transactions per month that are going through us every month. So we've got a very, very rich amount of data, probably the largest data set in the industry pertaining to settlement agents out there today.
Yeah, you've sufficiently horrified me with your statistics here. starting to get a little hot in here.
Don't worry, man. You're fine. You don't have to worry about this. We're here to partner with you. So
that's true.
Yeah. Breathe easy.
all is well. Whew, I was stressed for a second, but now all is well in the world. So now that you've horrified me from the operating side of the fence, let's go into the cyber side with a few minutes left, and just unpack that Pandora's box for me. We've I mean, that's a constant battle for us. We run into I don't know what the proper technical term is, but like attempted attacks, like that is a more frequent occurrence than I would have guessed if I wasn't at a financial firm. How in the world do you go about combating that other than just trying to lock down everything as much as you can?
So there's a couple buckets of why cyber criminals do what they do. All right. And then we can talk about the industries they hit. So one is they kind of want to cause disruption, right? For political reasons, or to make a message, or to show that there's, create lack of trust in a system, company, or a service. And typically those are going after like the industrial sector, the food sector, the network, right? Like the actual power grid, right? They're trying to attack those sort of things to kind of show that, country X is trying to show that country Y's regime is not capable of providing basic infrastructure and services, right? And have a political message associated to it, or they're just trying to wreak havoc. And then beyond that, you've got folks that are trying to extract data, right? And they're trying to extract the data because they can take that data and package it for financial gain. And that's still a bad cyber criminal, but they're kind of a step removed. They're kind of like packaging bunch of data. And a lot of times, a lot of that data people are opting to share. So they're taking data that people are opting to share to then use that data that they've amalgamated to now have a better digital persona to be able to get the information that's private that you may have out in cyberspace, like your credit card information and other sorts of data, social security, tax transcripts, right? They're trying to get all that. So they're bad, but they're not as bad as the last bucket, which is the guys that are going right for the money, trying to steal your money because they're just there to steal a dollar. Now, if I'm the U.S. government, I'm scared about this guy over here that's trying to steal money, but I'm much more scared about the guy that's trying to hack into our nuclear defense system, of course, for obvious reasons. So a lot of those sort of complaints go to the FBI. The reason the FBI deals with it is because they have field offices throughout the country. They deal with financial crimes. It's part of their workforce. They have set up an entity called the Internet Crime Center, IC3. So everyone should look at the IC3. We can put it in the notes after this. It's something everyone should bookmark. And just, my parents, I tell them about it, right? God bless their soul. They're older, they're retired. I tell them, like, look, go on there once a month to see what are the sort of attacks that are taking place, because a lot of it attacks there's elder abuse. There's stuff that attacks the real estate sector. And the biggest part of what's going on in kind of the real estate settlement sector, why is it so attractive? A, the number of recurring transactions, and two, the size and quantum of the dollars that are going through those transactions. So if I'm a criminal and I can steal a bunch of credit card data, we've all dealt with this. The first charge is 10 cents. The second charge is $1. The third charge is $50. And if you don't catch it, they try to take 1,000 and they move on. And they're doing this across hundreds, if not thousands, of accounts of compromised data to figure out who they can get to. And they buy that data on the dark web and yada, yada, yada. The cyber criminal that's attacking a real estate transaction is watching, monitoring, hacking into email communication systems, getting past your firewalls, and sitting patiently. And a lot of times that point of entry is usually the borrower, an attorney or a settlement agent who's on like a Google or a Yahoo Mail still. About 30% of the ones we see out there still don't have a proper enterprise email solution. I just don't get it. Don't start me on that one. And then beyond that, the other weak point of entry is this thing right here, as well as a guy that logs into his work account at a Starbucks on a public Wi-Fi without a VPN. We're all in financial services by now. Get your technology team to give you the right credentials to securely access anything sensitive. If you're touching any applications, the LOS, your bank account, logging into your banking portal, you should be going through certain levels of data security. This is like a little bit away from our subject, so I'll leave that for another guest or another session where we can bring in someone to talk about kind of how to secure your devices and your traffic. But that's the point of entry. Once they know that the transaction is taking place, they then try to figure out what are the weak points I can attack in this transaction. Is my best bet going after the borrower because there's a down payment going into a residential transaction? Or, is my best bet trying to intercept communication between a lender and a settlement company? by hacking into the settlement company and sending out artificial documentation and data. And now I may not even have to hack into the settlement company. I can impersonate them, set up a fake website, send wire instructions and a phone number for a phone call back. That's the big one that we see right now, is that the impersonation, which is a combination of phishing, kind of digital, kind of creating a digital persona, and kind of identity fraud. And then on top of that, it's also business email compromise, right? Because a lot of times they're also hacking into legitimate email systems. So it's not just one type of cyber attack that's taking place. It's numerous, and it's very coordinated around specific transactions. And that's what we see, and we see it all the time. Our clients see it all the time, but luckily for them and for us, we have workflows that we go through and procedures that we go through, including requirement around source data. We don't take self-attested data from anyone. And that's kind of not the zero trust principle, which is another topic that's kind of big out there. It's very hard to operate in that zero trust environment, but it's around who is providing these representations and who can back them. And ultimately, we've been able to be a party that, because of our workflow, our independent nature of our data, we can provide warranties to our clients to back what we do. And that's why clients like Lima One like us, because we are truly pari passu in this risk. It's a specific risk, but we back it, right? Up to $5 million per transaction.
All the more horrified, Adam. But again, we're good because we got you. Everything's good. I think what
I'm a happy person. The world has tons of risks, right? Like I remember one of my first jobs was working in insurance banking, and I've met some of these insurance underwriters, and they can walk down the street, right? And they're like looking, oh, don't walk here. Like, you're in New York City. Don't walk over the metal grates, right? Like, you fall in. I mean, like, at some point, you got to live your life. But I think there's certain prudent actions when you're running a financial operation you have to take. And most lenders today have pretty sophisticated enterprise risk frameworks. And I think a lot of the emerging players in your space, we work with a lot of the investors too in this space that are buying and aggregating the loans. And they often have some of the smaller originators come to us, or guys that are starting out that sell to them, because they may be formulating some of those best practices. This is one of those underbelly risks that's kind of hard to find the right skill sets and the right processes to manage. So we tend to have clients in this space that are just starting out, doing their first loan, all the way through folks like yourself who are, 7-8 years into to this business, which kind of makes you one of the more mature players, as well as guys who securitize and have a shelf, and we're written into the securitization guideline. So we think about this stuff the way you guys think about it, which is, how do I demonstrate a control's taking place? How do I clean up the data? How do I make my operations and back office team more efficient? Because that's the only reason Lima One uses us, is because we help lower your operating cost. And then how do I make better quality data go to closing, so I'm not dealing with messed up documentation post-close? Because that's another piece of what we do too, is we're getting things right earlier. You're not dealing with these trailing docs, because that's expensive for all parties involved.
I have one, if I could switch gears for a second, one completely off-topic question. You have some baseball caps behind you. It's very confusing. It's so confusing. I'm a Yankees fan, so no harm, no foul. But you have Boston Red Sox. You have the Angels. What's going on back there? Who do you root for?
So I'm a Boston guy through and through. The cheapest way to watch the Boston Red Sox is at the Stadium. So I'm assuming. No, I have a lot of respect for Ohtani. I think he's great. He's right down the street, and I typically go watch the series when the Red Sox come into town every year. But yeah, I'm a Boston guy, so for all you New Yorkers, please don't hate on me. I did live in New York for about 10 years, New York and London for about 10 years. So I miss the old Yankee Stadium. I'm sure you do too.
Yeah.
But it's always fun to go to the Home Run Derby Stadium, the new Yankee Stadium, to watch people knock it out of the park.
Get out of here. I do.
Nothing better than a Fenway Frank, man. I'm gonna tell you that.
This is going off the rails quickly. No, I was a wee boy, but I went to my first Yankees game was Roger Clemens' 350th win, and it was also the last year at the old Yankee Stadium. I've been to the new one a few times, and I love everything about the new one except the fact that they quadrupled prices whenever they built the new one. And like you, I'm in Greenville, South Carolina. The Braves are 2.5 hours away. So that's the close, highly economical Major League Baseball viewing, as opposed to plopping down a G for solid seat, legend seats at Yankee Stadium. So
Yeah, absolutely. Plus the new price of tickets to fly up there is just gotten crazy.
yes, flights are insane. I went down to, so we go to IMN East every
Yep.
year, which is SFR
Yep.
conference.
Yep.
And, I've been going every year I've been here. I think our first conference was in 2016, first time we did it, May 2016. And like clockwork, probably 450 to get out and back. And it was close to double that just going from South Carolina to South Beach. And flight prices are insane across the board. Some had a friend who went out to Irvine, California, and it was 4 figures for a main cabin ticket. It's like, what is going on?
That's the world we live in. So I think it's going to cause more people to attend these conferences because it's just harder to rationalize one-off sales trips. Of course, for key accounts and whatnot, it's different. But we see the same thing. We're kind of like going through budgets and forecasting how do we want our travel and our sales to work. So we'll be at the IMN, we'll be at the Western Secondary. We're sponsors here on the Resi side, and then the CREF, the CMBA CREF. Vegas is still relatively cheap. I think they've factored in the cost to fly there. So they're trying to make the rooms cheaper. So I think Vegas is going to see a lot more conferences pick up. So we'll be at the California, the CMBA CREF conference as well for their commercial lending side too.
Yeah. Crazy.
Cool.
All right, my friend. I can't thank you enough for carving out some time. You horrified me and then reminded me that we're completely safe. So I'm a roller coaster of emotions during this podcast, but I learned a ton about kind of the barbarians at the gate and how we beat them back. And thank you for all that you and your firm are doing to combat the bad actors out there.
Thank you. And of course, thanks for your business and taking the time with me here. And look forward to chatting with you again sometime in the future.
Absolutely. Thanks again, Adam. And thanks everybody for listening. Take care.
Cheers.